What if I told you that two currencies that many people have ignored for years are suddenly making global headlines and forcing big players in the Forex world to pay attention? Imagine waking up and realizing that the money people once laughed at could soon become a powerful player on international trading platforms. The Iraqi Dinar and the Vietnamese Dong have now entered a spotlight many never expected, with live Forex rates finally being confirmed across worldwide markets. This is not a rumor and is not speculation without basis. This is happening right now in 2025. Today we are going to break down exactly what these changes mean, why IQD and VND are suddenly being tracked on major platforms, and what traders and investors around the world are starting to ask, could this really be the start of something historic? Stay with us, because by the end of this report you will see why many believe the story of these two currencies is far from over. Let's begin with the Iraqi Dinar, a currency that has been sitting in the shadows since the early 2000s after years of war, sanctions, and instability. For a long time, the dinar was not actively traded outside Iraq, and most banks around the world refused to even touch it. Investors who believed in the currency were often dismissed as dreamers. But in 2025, things are beginning to look different. The current live rate shows approximately 1,310 dinars to $1, and for the first time in years, these rates are not just printed numbers but are appearing in real time on recognized Forex platforms. That alone signals a shift in how global markets are willing to view Iraq's financial system. The dinar may not yet be strong, but it has stepped out of the shadows and onto the main stage of international trading. That shift matters more than many people realize. Now let's turn to the Vietnamese Dong, another currency that has been long undervalued in the eyes of global investors. The Dong is currently trading at about 24,000 VND to $1, which seems like an overwhelming figure at first glance. But Vietnam's situation is not the same as Iraq's. Vietnam has shown years of strong and steady economic growth. It has become a global manufacturing hub, attracting investment from companies seeking alternatives to China. Electronics, textiles, agriculture, and more continue to fuel Vietnam's export-driven economy. Forex traders are now tracking the Dong more closely than ever, and many believe it is poised for slow but steady appreciation. While it may not see overnight changes, the fact that its trading activity is climbing worldwide is another signal that currencies once ignored are starting to matter again in 2025. Here is where the conversation gets very interesting. There has been ongoing speculation about Iraq possibly removing 3 zeros from its currency. This process is called redenomination. Many countries have done it in the past, including Turkey in 2005, when they removed 6 zeros from the Turkish lira. Redenomination does not automatically make a currency more valuable, it simply makes it easier to use. Instead of paying 1,310 dinars for a single dollar, citizens would pay 1,1 dinars. It sounds simple, but it is often misunderstood. Redenomination is not the same as revaluation. Revaluation is when a currency genuinely gains value because of stronger economic fundamentals. For Iraq to truly see the dinar rise above $1, they would need massive political stability, higher oil production, infrastructure growth, and international confidence. Without those elements, redenomination would just change the numbers on the banknotes, without changing the underlying strength of the money itself. The question many investors keep asking is whether Iraq could realistically revalue its currency. On paper, Iraq has the resources to do it. The country has some of the world's largest oil reserves, around 45 billion barrels. Oil makes up about 90% of Iraq's government revenue. This wealth gives Iraq tremendous potential, but potential alone is not enough. Political divisions, ongoing corruption, and infrastructure challenges remain huge obstacles. Until these issues are addressed, expecting a sudden overnight rise of the dinar to $1 or more may not be realistic. However, the fact that Forex markets are now giving Iraq's currency live attention is still a milestone worth noting. It means the world is at least willing to watch and measure Iraq's financial future instead of completely ignoring it as in the past. Vietnam, on the other hand, does not face the same type of political chaos that Iraq has endured. Instead, Its challenge is how to keep up the momentum of its fast-growing economy. The Vietnamese dong has been seen as undervalued for years, yet Vietnam's steady GDP growth of 6% annually suggests long-term currency appreciation is possible. Already, many companies are shifting factories from China to Vietnam, boosting its manufacturing sector. The Forex community is noticing these changes, and live trading rates reflect that investors are no longer dismissing the dong. While appreciation may be slow, Vietnam is building a reputation as a stable and growing economic power in Asia. This makes the dong one of the most interesting currencies to watch in the years ahead, particularly as international trade dynamics continue to shift in 2025 and beyond. History shows us that major currency changes do not happen overnight. Look at Turkey, Brazil, Germany, or South Korea. Each experienced significant currency adjustments, but they were tied to long-term reforms and rebuilding. Kuwait is often brought up as an example because after the Gulf War, the Kuwaiti dinar returned stronger than ever. But Kuwait's situation was unique. It has enormous oil wealth and a much smaller population compared to Iraq. Iraq, with more than 40 million people, needs far greater economic reforms before its currency can reach such strength. This is why traders often remind new investors not to confuse historical examples with Iraq's current reality. Every nation's path is different, and while Iraq has potential, it also faces heavier burdens before reaching that level of currency power. So what exactly are traders watching in 2025? For Iraq, it is a combination of factors: foreign reserves, oil output, government stability, and foreign investment. These indicators tell the real story of whether the dinar could strengthen. For Vietnam, traders watch GDP growth, export data, manufacturing expansion, and foreign direct investment levels. They also keep a close eye on Vietnam's relationship with both the United States and China, as these two giants have the most influence over Vietnam's trade prospects. Live Forex trading platforms now provide global investors a window into these movements, and that visibility means both currencies are part of the worldwide conversation in ways they were not just a few years ago. Let's talk about the risks, because currency speculation is never simple. Many people think buying a foreign currency is like buying stocks, but the two behave very differently. Stocks can rise quickly when a company performs well, but currencies are tied to the overall strength of entire national economies. For a currency to double in value, the entire economy needs a major transformation. That is why professional traders often say betting your savings on a single currency is dangerous. Political surprises, sudden conflicts, natural disasters, or changes in central bank policies can wipe out value overnight. With IQD and VND now showing up on global forex markets, the temptation is strong, but caution remains the key word. The forex market itself is enormous. Every single day, around $6.6 trillion are traded worldwide. That makes forex the largest financial market on Earth, far bigger than stocks or bonds. Professional traders dominate this space with advanced tools and strategies that most individuals simply do not have. When we hear stories of people betting on IQD or VND expecting overnight riches, it is important to remember that even experts with years of experience struggle to predict currency movements accurately. Central banks can change policy without warning, and global events can shake markets in hours. That is why financial experts often advise everyday investors to diversify instead of putting all hope into one or two currencies. Still, we cannot ignore the fact that 2025 marks a turning point for both the Iraqi dinar and the Vietnamese dong. For the first time in years, they are not being completely dismissed. Major forex providers are listing them with leave data, and that signals legitimacy. When a currency has global visibility, it opens doors for trade, investment, and speculation. Iraq and Vietnam now both find themselves under the magnifying glass, and what happens next will depend on their governments, their economic performance, and their ability to attract foreign investors. It is not yet a revolution, but it may be the first step toward one. For Iraq to move toward a stronger dinar, several things must align. Political stability must become more than a promise. It must become a reality. Infrastructure must be rebuilt, from power plants to roads to schools. Oil production must expand and be managed efficiently, ensuring revenue is reinvested in the country rather than lost to corruption. The banking system must modernize, making transactions smoother for citizens and safer for investors. Foreign investment must be welcomed, not hindered by red tape. If Iraq can achieve these steps, then the dream of a stronger dinar could move from speculation to reality. But achieving all of this is a long-term journey, not an overnight miracle. Vietnam's pathway looks different, but it is also long-term. To see the dong strengthen significantly, Vietnam must continue to expand manufacturing, invest in high-value industries, and strengthen its education system to produce skilled workers. Infrastructure like ports, airports, and highways must keep pace with growth. Political stability must be preserved as stability attracts investors. If Vietnam maintains these trends, the dong could gradually appreciate over the coming years. This would not be the kind of sudden spike that excites speculators, but rather a steady and sustainable climb backed by real economic progress. Looking back at history, major currency changes often followed periods of war recovery or rapid economic rise. Japan's yen grew stronger as Japan became a post-war economic giant. South Korea's won appreciated as its industries became global leaders. Germany rebuilt after World War II and created one of the world's strongest economies. Each of these stories took years, even decades. This historical perspective is crucial for anyone watching Iraq or Vietnam today. Yes, both nations have potential, but patience is the true test. Overnight success stories in currencies are rare, and when they do occur, they are usually linked to extraordinary events. The reality of Iraq's economy today is that oil remains both its strength and its weakness. Oil accounts for nearly 90% of government revenue, which makes the economy highly vulnerable to global oil prices. When oil prices rise, Iraq gains. When they fall, the entire budget suffers. Until Iraq diversifies its economy, the dinar will always depend heavily on oil markets. Vietnam's economy, by contrast, is more balanced, with manufacturing, agriculture, and services all contributing to growth. This diversity gives Vietnam an advantage and explains why the dong has been more stable compared to Iraq's dinar. What are forex traders actually doing with these currencies right now? Most are not betting on huge revaluations. Instead, they focus on short-term price movements. They analyze economic reports, central bank announcements, and geopolitical developments. They look for small but consistent profits rather than massive gains. Some larger funds do hold positions for long-term trends, but they spread risks across many currencies instead of concentrating everything on one. This professional approach highlights why retail investors should always tread carefully when chasing the dream of quick profits from IQD or VND. So what is the realistic outlook? For Iraq, gradual economic improvements could slowly push the dinar upward over time, but sudden and massive gains are unlikely without sweeping reforms. For Vietnam, steady growth in manufacturing and exports may slowly support a stronger dong, but again, we're looking at long-term appreciation rather than overnight success. Both currencies are in the spotlight now because of increased global trading visibility, and that alone is a big shift. But for investors hoping for extraordinary returns, the message remains the same: extraordinary change requires extraordinary progress, and that progress takes time. In conclusion, the Iraqi dinar and Vietnamese dong have stepped onto the global stage in 2025 in a way we have not seen before. Their presence on major forex platforms marks a turning point in how these currencies are viewed. And while their futures remain uncertain, one thing is clear: they can no longer be ignored. The world is watching Iraq and Vietnam, and traders everywhere are measuring their next moves carefully. As always, currency investing carries risk, and no one should gamble more than they can afford to lose. But as these two currencies continue to attract attention, the story is far from over. The next chapters will depend on economic strength, political stability, and international trust. Stay tuned, because the evolution of IQD and VND in global markets may very well become one of the most fascinating financial stories of our time.